The idea that Bitcoin is rising because it's scarce is complete nonsense. Bitcoin supporters claim economic nonsense, and Bitcoin will never establish itself as a world currency. These are the latest hot takes from ETF guru Gerd Kommer, who says he has changed his mind about Bitcoin. Where just a few months ago he was quite negative, he has now changed his perspective. He speaks quite critically here, but also sees many positive things that he likes about Bitcoin. And above all, he says that Bitcoin ETFs were an absolute game changer. And he gives a very interesting assessment of Bitcoin, talking about many background details on Bitcoin ETFs that you may not have heard before. We're taking a look at the hot takes from Gerd Kommer, who was a guest here with Timo Bautis. I hope I pronounced the name correctly. I'll also link the full interview down below. It's definitely worth watching because there are some really interesting takes in it. Now we're going to take a look at the best clips, and I'll also give you a little insight on that.
And in that sense, it was definitely a kind of game changer for crypto. And that was important for me, because before I was never really against crypto. I just see it objectively. A lot of things that crypto fans claim, like the idea that Bitcoin has to increase in value just because there will only ever be 21 million of them, is complete nonsense, absolute nonsense. There are only so many pebbles in the world. Does their price keep going up? Everything in this world, using every element, chemical element, and basically, almost everything that exists here on this planet is physically limited. Is that why it keeps increasing in value? So, excuse me. Yeah, I get the point. So there are an incredible number of crypto arguments in the crypto community that are just economic nonsense.
So when I tell you here that Bitcoin is rising because it has a limit, because it is not just relatively limited, like for example, gold or other commodities, but absolutely limited, then that's just complete nonsense. And that's a really bold statement he's making here. I mean, you definitely have to agree with me, Bitcoin doesn't just rise because it's limited, because you also need a certain amount of demand. It also has to be liquid. It has to be able to be traded internationally. It needs certain other properties. It has to be durable, it has to be transportable, divisible, and much more, used in order to make it a good store of wealth or something like that. But what Mr. Kommer ultimately gets wrong is that he presents Bitcoin as just some arbitrarily scarce good or something like that. The difference with pebbles, which he mentions, is that yes, pebbles are limited, and sure, they are relatively scarce, but with technological advancements, it will become easier to extract pebbles. That means the production costs for pebbles go down, the production costs for gold go down too. It's always getting easier to mine gold. Now here comes the kicker. At some point, it will also be possible to extract pebbles in space for nearly zero cost, gold for nearly zero cost, and a lot more when the price of pebbles goes up. So that means the production costs for pebbles go down, the production costs for gold go down, and it's getting easier and easier to mine gold. Now here comes the highlight. At some point, it will also be possible to extract pebbles in space for nearly zero cost, gold for nearly zero cost, and a lot more when the price of pebbles goes up. When the price of gold goes up, what do the miners do? What do the commodity producers do? They just dig deeper into the ground, or they might even go into space. They're looking for ways to extract more pebbles, more gold. So we don't really have any true scarcity here. All we have is a certain relative scarcity. We could now go into physics. Einstein says the universe is infinite, so we have a constantly expanding universe. So the argument about limited pebbles or the argument about the scarcity of gold just isn't true. Right now, we just don't have the technical capabilities to extract that much gold or pebbles at nearly zero cost, which is why there's still a relative scarcity. And that's the great thing about gold. It's relatively limited because we don't have the technology to mine gold at nearly zero cost, but eventually that will change. And that has also been the case with other commodities. Or for example, people used to use shells as money. What happened then? Suddenly some nation had so much technological capability that they could mine mussels at almost zero cost. And then the entire currency area is inflated by the people who were able to promote it very easily using technology. They just went and bought up all of Africa because they had these big ships, while the folks in Africa didn't have those same technological advantages. And that's ultimately the point that needs to be made clear here. This is definitely a false statement. Because the really special thing about Bitcoin is its absolute limitation. Bitcoin's supply is fixed 450 mined daily, having every 4 years. Just like with gold, there won't be more Bitcoin mined. The same amount of Bitcoin will be mined. And if Bitcoin skyrockets to 100 million tomorrow, and the whole world goes crazy and gets FOMO, buying Bitcoin like there's no tomorrow, they still won't mine more than 450 Bitcoin a day right now. In 3 years, it'll just be half of that 450 Bitcoin, and then in another 4 years, it'll be half of that again. That means it keeps having all the way until 2140. And that's the difference. Bitcoin is absolutely limited, while everything else is relatively limited.
I think crypto is here to stay. As an asset class, as a valuable asset just like gold, even though gold doesn't really have any economic or commercial utility. Microscopic parts in electronics, the annual gold production, and what goes into jewelry, about 30% of the annual gold production goes into jewelry. Jewelry is mainly in India and China, where the primary demand comes from. It's the same as a gold bar. They're buying it. It has nothing to do with, I'm buying my fiancée a nice gold ring or something that she wears every day, hopefully, if not anymore. Leading indicator. 1,000. So gold has no commercial use, and yet has been valuable for thousands of years and even for over 50 years, when it was no longer the backing of a world currency at the end of 1904 and 1970.
Gold experts argue Bitcoin lacks industrial use, predicting a price crash without buyers. Gerd Kommer refutes this, noting it's untrue for both Bitcoin and gold. Gold's industrial use is minimal, around 3 to 4%. And a lot of gold experts always say, yeah, Bitcoin is so bad because it has no industrial use, and if BlackRock doesn't buy Bitcoin, and if no one else buys it on the market, then the price will crash because no one uses it in industry. That's obviously a totally ridiculous argument, and Gerd Kommer gets it too. He makes it clear that this isn't the case for Bitcoin, nor is it for gold. With gold, it might still be somewhat true to a certain extent, because maybe about 3 to 4% is used for some old gold from grandma or something like that. Yeah, that might be true, but that's not really the reason why people use gold as a store of value. It's because of its awesome properties, like its scarcity, its censorship resistance, and the fact that it lasts for thousands of years. It's tough to mine, and it has all these different characteristics. Bitcoin has those same kinds of properties that make it a really, really good store of value. And that's definitely very, very true. Now, I had something interesting here from 2021, and it was mentioned that it changed in 74. No, he said it changed to 74, meaning that money is no longer backed by gold. Let me know when the gold standard was actually abolished, because it definitely wasn't in 74. Feel free to hit pause for a moment. In a second, you'll get the answer here. Because the gold standard wasn't abolished in 74, but in 71. So in 71, there was the Nixon shock, where Nixon announced overnight that the tie to gold was temporarily suspended. And so far, the tie is still temporarily suspended. So theoretically, the tie hasn't been abolished, just temporarily suspended. But I mean, nothing is as permanent as a temporary government intervention. There's a saying that goes, okay, let's put this aside for a while. And in the end, 100 years later, you find out that the temporary government intervention is still holding strong. But I don't want to hold that against him because, those are just little factual errors or something like that. That can happen sometimes. I also sometimes say in interviews that I mix up numbers like confusing millions with billions or whatever. So you really have to take it easy and look at it from a chill perspective. I actually read my first book back then by Gerd Kommer called Investing Sovereignly with ETFs. So really props to Gerd Kommer. He's doing some amazing work. Yeah, and the whole ETF thing and all that. If that's the case, for example, someone else might say that in 2021, Bitcoin is maybe even cooler than ETFs because, ETFs are nice and all, but you don't really make much progress with them. You're looking at around, just under 3% per year in real terms. Maybe 2% if you look at an ETF against inflation, so after you subtract inflation, fees, and taxes. Because it's always marketed like you get around 8 or 9%, and in 2021, that's supposed to be super awesome. But 8% per year if inflation, the asset inflation is 6%, and then you add in the fees and taxes, you're basically breaking even or maybe taking a small loss, making 2 or 3% profit and stuff like that. So I used to buy into the whole ETF thing for a long time.
By now, I'm a bit more critical, but let's keep listening. It was the end of 1974, and I think something similar could happen with crypto. Because enough people see the crypto story as, blockchain, an alternative store of value. And who knows, maybe in a few years it could actually become the currency standard. I really think at best in a few years. The states won't want that. Maybe a digital currency that has crypto-like features. But that's not Bitcoin. That's a crypto-like digital currency that the respective central bank or government has created. But I have already argued and written elsewhere why, in my view, it is very very, very unlikely that Bitcoin or any other cryptocurrency will ever become the currency standard, a legal tender just as in Salvador. It will become legal tender alongside the dollar and is actually logical. And it's also not being used for payments in any significant way, which isn't even the case in El Salvador.
2021, yeah, exactly. They just initially got it because the government issued it, and then they exchanged it for the other currency, and that's fine.
So that's true, for example. Not really. I'm currently in El Salvador, and if you take a look around, there's a cocktail stand here on the beach where you can pay with Bitcoin, and up there's a restaurant where you can also pay with Bitcoin. I live here almost on a Bitcoin standard, which means I pay my rent, my motorcycle, and pretty much everything with Bitcoin, except for a few places like fruit stands or something where you can't pay with Bitcoin. Sure, I have to be honest, I'm here in El Sand, and it's a special situation because the Bitcoin movement is really advanced here. It should also be noted that El Salvador no longer has Bitcoin as an official means of payment, but it can now only be used voluntarily. But if you play your cards right here, you can actually pay for quite a bit with Bitcoin. But I agree with him here. It could take a really long time for Bitcoin to establish itself as an official currency worldwide. Right now, it's mainly being used as a store of value. There's really no debate about that. That's definitely a completely valid point. And whether it eventually establishes itself as a world currency or something like that, I'm definitely a lot more bullish than Mr. Kommer, but you can also look at it critically, and that's absolutely a legitimate point. And it's definitely very, very interesting. And now we're moving on to the next part where Gerd Kommer talks about Bitcoin ETFs. And that's really super interesting because Gerd Kommer probably has the most amazing expertise you can imagine. He's the absolute ETF guru. I don't even know how many books he's put out about ETFs. And now Bitcoin has the best performing Bitcoin ETF here, or not just a Bitcoin ETF, but the best performing ETF of all time. Look, there's another shop back there where you can also pay with Bitcoin. Here, where can you see it? You can also pay with Bitcoin here, even right on the beach. And now we're getting into the Bitcoin ETF part. And it's really super interesting because there are some things here that you haven't really heard anywhere else.
The next question comes from the leopard. Has your stance on Bitcoin as an asset changed with all the developments and news in 2024? And is there now a rapid increase in customer interest in your asset management?
Yes, it has changed in a certain way. For me, the moment, or the milestone, or however you want to put it, was the approval of Bitcoin and Ether ETFs in the US at the beginning of 2024. And I have to add some ugly footnotes, though. In Europe, where we generally lag behind the American capital market, there have actually been Bitcoin or crypto ETFs for other cryptocurrencies besides just Bitcoin and Ether for quite some time now. I'm not exactly sure, but as ETPs. No, that's a myth. That's basically the same thing. So first of all, the term ETF, we're going a bit off track here, isn't legally protected anyway. So you can also sell a kebab at the kebab shop and call it an ETF. Kebab or just call it an ETF, that's allowed. So ETF is not a protected term.
I just have to jump in here for a second because that's not entirely accurate. The reason there isn't a Bitcoin ETF is that in Europe, to get an ETF approved, it has to contain at least 2 assets. So you have to E.G. Here, Bitcoin and, for example, some miner or Bitcoin and maybe another cryptocurrency or whatever. There has to be a basket of at least 3 assets involved. So you can't just use a single asset and convert it into an ETF or something like that. And that's why you couldn't create an ETF with a kebab here 2001. But basically, I can't really argue with him on that. I'm not really familiar with ETFs and all that. You can still hear more. What she goes on to say here is really, really interesting.
Neither in the USA nor in Germany or the EU. So yeah, it's pretty standard in the industry to only use ETFs based on usage, funds. So it has to be a security. There have to be securities underlying it, which crypto isn't. Gold ETFs aren't securities either. And instead, they're referred to as ETPs, exchange-traded products, or exchange-traded commodities, ETCs, or even ETNs, exchange-traded notes. All these ETCs, ETPs, ETNs, ETP is actually a bit of an umbrella term, and under that you have ETFs on one side and ETCs and ETNs, which are basically the same thing. Underneath, these so-called ETCs are designed so that cryptos like Bitcoins or gold bars are purchased. They're stored somewhere safe, exclamation point, safely stored at a regulated institution. And then there's a bank involved. There always has to be some bank involved in Europe. They issue a bond, which is basically what you're buying, a bank bond, an old term for a bond. But this bond doesn't pay interest. Instead, it has a payoff profile that simply reflects the Bitcoin returns. You only get the Bitcoin returns every day, whether positive or negative, no interest, even though it's called a bond. The important thing is that the cryptos are actually bought with the investor's money and securely stored in some institution. And this crypto holding can be delivered. Exactly, it can be delivered. And this so-called vehicle, the legal vehicle, the CTN, as a lien on those cryptos, on the Bitcoins. So if for some reason everything goes wrong and this whole thing gets unwound 2001, then there wouldn't be any bank bond anymore, because now, for example, the bank as a trigger that could be the decisive reason goes bankrupt. Then we have a problem at first. Then this ETN could probably be liquidated, it might get unwound. But since the owners of the shares, meaning the investors, have a lien on the pledged cryptos, the cryptos are now simply sold at market price, at the current rate, and the cash is then paid out to the investors. That would be a scenario that could happen, maybe the delivery of the cryptos, the physical Bitcoins could happen in quotes physically. It would be a different scenario, but it would essentially come to the same thing economically.
That's basically the cash or in-kind discussion. Cash ETFs exist, and the SEC hinted that in-kind ETFs might be approved. This allows direct Bitcoin cash out, boosting adoption. Otherwise, convert ETFs to cash, then Bitcoin. This simplifies conversion, but reduces oversight. You could cash out Bitcoin ETFs in the US directly in Bitcoin, boosting adoption. Normally, you convert ETFs to cash, then back to Bitcoin. This change allows direct conversion, providing an extra boost. However, it reduces regulatory oversight, as authorities like Gensler prefer a cash variant for better monitoring. If you want to convert Bitcoin ETFs to cash, you have to go from ETFs to cash. This change allows direct conversion from ETFs to Bitcoin. However, it means less regulatory oversight. They couldn't monitor Bitcoin ETFs effectively, hence Gensler and others pushed for a cash variant. Importantly, it's not really ETFs, and in the US, the legal structure differs, but economically, it's the same. That means they wouldn't be able to control the Bitcoin ETFs as well, and that's essentially why Gensler and the others have, in essence, pushed for a cash variant.
But what's important is that these aren't ETFs, and the legal structure is different, but economically, it's the same. The European ETPs are as good as the American ones. Crypto ETPs or gold ETPs are safe. Germany was ahead, and here Europe was also ahead. The European ETPs are no worse than the American ones, so crypto ETL ETPs or gold ETPs are no worse, they are just as safe. And again, Germany was ahead, and if Europe was ahead in this case too, otherwise we are always the red lantern worldwide. And when so-called crypto experts say, I have really read everything, that the USA has now approved crypto ETFs and we don't, that is nonsense. Economically and legally, we have exactly the same thing. The structure isn't exactly the same. For example, an American mutual fund, which is what we call actively managed stock or bond funds in Germany, is legally constructed a little differently than a mutual fund in the EU. But economically, when it comes to special assets, and the fact that the fund can't use leverage, meaning it can't go into debt with the investor's money, it's all exactly the same. However, if you look at it from a legal perspective, which isn't really decisive here, you'll notice some differences. It's clear the Americans do it differently than the Europeans, but economically, your real risk from the underlying asset and your risk from the packaging is identical.
Okay, so that means the BlackRock ETF and the other ETFs, I think, that was a milestone. It was a real endorsement, exactly.
And yeah, sorry, that was actually the original question. Then I kind of went off on a tangent. So the political risk, regulatory risk, is a form of political risk has drastically decreased because the most important financial regulatory authority in the world, the SEC, has basically said yes, indeed against the will of the then chairman,
So those are all really, really interesting points that I wasn't familiar with in that way. I'm not really that deep into it either. ETF, ETP, what's the difference? I'm just going to believe him here. You are also welcome to write in the comments whether everything that has been said to you 2,100 times is true. But what's actually not true is that Gensler was against Bitcoin back then. There was a vote, and I think it was something like 3 to whatever, so definitely unanimous. I'm not sure if it was 1 with 3 votes, or if it was like 5 people and then it ended up being 3 to 2 or something like that. In any case, it came down to a single vote, and Gary Gensler voted in favor of the Bitcoin ETFs. If he had voted against it, then the Bitcoin ETFs wouldn't have gone through. Gary Gensler also gave lectures on Bitcoin in 2017 or 18. He also says that the Bitcoin vision, the Satoshi Nakamoto vision, is real. So Gary Gensler definitely understands Bitcoin. In my opinion, he's also a big supporter of Bitcoin. Everything he didn't really like here was the whole crypto scene. That's why all the crypto folks were so pissed off at him, because he doesn't want to regulate meme coins, NFTs, and the whole deal as easily as he does with Bitcoin. But that's just a small correction. What Kommer is saying here is still very, very interesting.
Crypto products packaged as ETPs can be sold to regular consumers, everyday households, with minimal restrictions. You do have to fill out a questionnaire with your financial advisor or something like that, but other than that, there are no limits or restrictions, so in this case, they've basically checked the regulatory box, and humanly speaking, that box isn't going to be unchecked. At least not for the reason that crypto is way too risky and only criminals are involved. That can't be the reason, at least not in a reasonable sense. The BlackRocks of this world would immediately sue against that because it would be arbitrary and so on. In that sense, I wouldn't say the term stamp of approval fits perfectly. It sounds a bit like everything is beautiful and noble and there's no risk involved, which I wouldn't agree with, but at least the regulatory risk has drastically decreased, and other jurisdictions, whether it's Japan or the EU, would now have a harder time if they tried to impose restrictions. 2000 and 1000, and in that sense, it was kind of a game changer for crypto. And that was important for me because before I was never really against crypto. I just see it objectively.
Many things that crypto fans claim. For example, that, well, in the end he is saying here, Bitcoin can no longer be banned because we now have 2001. Yes, he said the accolade here, he thinks that's a stupid word, but maybe it's true. There are certain risks. Not having enough knowledge can lead to selling at the bottom. You need to hold Bitcoin long-term. There are pitfalls. Not having enough knowledge can lead you to sell at the bottom, or you might get shaken out by the volatility. Not realizing that you actually need to hold Bitcoin long-term. If you're just a short-term trader, you can get caught off guard by the volatility. There are always a few pitfalls you can fall into, or you might mess something up with self-custody. So the whole Bitcoin ETF thing is really, really interesting here. But I would still always recommend keeping your Bitcoin in self-custody. That means you actually get a lot more benefits from Bitcoin if you really have it on your own hardware wallet. I'll also provide you with a link to a TREZOR hardware wallet below. The easiest way for you to hold Bitcoin here is without having to trust a platform, without having to trust an issuer, without having to trust BlackRock or some guy named Gerd Kommer, or any other person managing your Bitcoin through an exchange or an ETF. So that's all cool, but for private investors, this is just my personal opinion, it sometimes makes little sense to buy such ETFs because they are also taxed differently, like for example, buy Bitcoin directly. Bitcoins are purchased directly and are tax-free after 1 year. With a Bitcoin ETF, it's not the same because a Bitcoin ETF is regulated like a security, and the same probably goes for the ETP or something similar. So down below, I'm putting a link to a TREZOR hardware wallet, and if you use the code Bitcoin Hotel, you can also get up to 10% off on one of those TREZOR hardware wallets. And in the end, yeah, that was a very, very interesting assessment. I think Kommer has valid points here. He also brings up our bullish perspective, or my bullish perspective, for a second look because it's always good to hear some critical voices that aren't ultra bullish. I'm definitely a lot more bullish, but it's also absolutely legitimate for someone to take a more objective approach, as he says himself, or to look at the whole thing a bit more critically. If you want to buy Bitcoin, I'm also going to put a link down below to 21 Bitcoin, which is the easiest way to buy Bitcoin in Europe. Here, you can also get up to 20% off the fees when buying Bitcoin with the code Bitcoin Hotel. Super easy for beginners, suitable for pros. You can set up savings plans, limit orders, and a lot more. Let me know what you think about Gerd Kommer's statements. See you later. I'm signing off from Bitcoin land, from El Salvador. See you later. Peace out.